I've got a clarification, a mistake I made in the last video I've got to correct, and I've got an apology. Plus, we've got plenty of headlines. I got a whole bunch of them here, really important ones. There's a lot going on. And then we're going to talk a little bit about unemployment, and I got to show you something from the last video. On behalf of myself and the entire Peter Leeds team, we love you guys, we do this for you, and we do this because of you. Understand that nothing we say is ever intended as personalized trading advice for you. And the clarification I need to make is that I said something that might have been taken the wrong way. You can see it from a different way than I meant it. I was talking about that I released my entire portfolio. I mean that I was making it publicly known, not publicly, but to subscribers of peterleeds.com. Every stock, every option that I own, even the physical metals I own, all of that was released to the subscribers of the newsletter, and I said it in a weird way that sounded like I sold it all. I didn't sell it all. And the mistake I made in the last video, I knew what I was trying to say, but I said it reversed. If you are hired at a typical fast food restaurant, you're going to only be there for less than 1 year. The point being that's a really high turnover rate for a business. You guys know I'm trying to raise an army, and that's what my apology is about. Apparently, you can't see the join button if you're using an iOS device like an iPad or an iPhone. I didn't see that coming. So I've got a link below this video that's going to show you exactly how easy it is to join the Peter Leeds Army. You just have to do an extra step if you're on an iOS device. Then you get special emoticons, you get special badges beside your name, and the longer you are a member of the Army, the greater your rank gets. The colors change on the icon. And now we'll get into the important headlines, and then I've got to tell you one thing about that last video. CNBC Pro, what Tesla's Bitcoin sale means for the crypto outlook. On Wednesday night, Tesla reported its second quarter earnings that it has sold 3/4 of its Bitcoin holdings for $936 million. And it was only 18 months ago that they bought $1.5 billion worth of Bitcoin. Bitcoin's price subsequently rallied to an all-time high of about $68,980 in November, but then plummeted to a 2022 low of roughly $17,600 last month. Cathie Wood's ARK Invest estimated that if 1% of corporate cash of every company in the S&P 500 were converted into Bitcoin, the Bitcoin price would balloon by more than $40,000. If each company converted 10%, then $400,000 was a reasonable outlook for Bitcoin. I do not know where Bitcoin prices are going to go, but Cathie Wood does not know what she's talking about. Still, many investors are unperturbed by Tesla's decision. They say the company did what's best for it in the near term in light of what CEO Musk has called a super bad economy. So if you think it's a super bad economy, then you waste hundreds of millions of dollars. It's kind of like El Salvador that converted to Bitcoin as their official currency. They did that at a higher level and it came down a lot, and now that's just wiped out a lot of the value of the country. That was a mistake for El Salvador. It was a mistake for Tesla. Now I've got two headlines here that are both related. Check this out. European Central Bank surprises markets with larger than expected rate hike. Its first in 11 years. They're going to increase rates again in September. Frankfurt, Germany institution has kept rates at historic lows in negative territory since 2014. Investors kept a keen eye on details regarding the ECB's new anti-fragmentation tool, which is aimed at supporting those nations with lofty debt piles like Italy. The European Union is under a lot of strain, and there's a lot of reasons why. There's a lot of bad blood. A lot of people are pushing for it to break apart, for some of these countries to go back to their own natural endemic currency, because they're all in one collective. But it's like going camping, and one person's cooking the meal, and one person's cleaning up the campsite, and another one's just sitting there drinking beer. There's a lot of bad blood between countries because some are much more indebted, need much more support, even though they're all parts of one big thing. But in contrast to that, Russia actually slashed their interest rates. Russia slashes key interest rate by 150 basis points in a shock move. It's the fifth rate cut by Central Bank of Russia so far this year, after an emergency hike from 9.5% to 20% in late February, following Moscow's invasion of Ukraine. In June, it reduced the rate by 150 basis points to 9.5%. The level it was at when the invasion began. Crypto startup blockchain.com lays off 25% of its staff as 3AC fallout spreads. Most of the layoffs, about 44%, affect employees in Argentina, while 26% are based in the US and 16% in the UK. And that is just another example of how unemployment is going to rise. And it is now, as I told you in the last video and other videos before, and now the unemployment rate is starting to increase, as is evidenced by this latest headline, which came out literally hours ago. Jobless claims rise again, and another sign that labor market is cooling. Initial claims 251, up 7,000 from the week before, and above the 240 estimate. That was the highest weekly level since mid-November. The Philadelphia Fed Manufacturing Index fell to a reading of minus 12.3 and produced the lowest employment reading since May 2021. Expect the unemployment rate to get greater and greater. The seeds are already in the soil and being watered. A lot of people are either laid off or being laid off or going to be laid off. That last video we did was 49 minutes long, and it was a quarterly state of the market report, so those will typically be every 3 months, and they'll typically be a lot longer than most other videos. But 49 minutes, you guys were troopers. A lot of you watched it right to the end. I'm really impressed by that. There's a lot of great information in there. It's talking about how everything's going to play out, the unemployment, the recession, all that good stuff. What I did, I was going back to pull out some parts for promotional stuff for penny stocks for dummies, promotional for the Peter Leeds Army. So I pulled out sections from there. And while I was doing that, I realized there's certain parts that a lot of people did not see because it was 49 minutes in that was really relevant. And I pulled out all my favorite parts of that video. But what I did is I sped it up a little bit just to show you what I think is the most relevant, most important points of that video. And it's in high speed. So I sound like a chipmunk, but it's important to see all the stuff that I thought was the most important that a lot of people did not see. And even if you did see it, it would be very important to watch it again one time. It's super quick. I've got it on high speed. And what do increased interest rates do? What is the point of increasing interest rates? They say to combat inflation. But what is it really doing? It's hurting the economy. The Federal Reserve says, are you worried the economy is running too hot? Don't worry. We'll punish it. We'll make it harder to run a business, harder to pay for debts you have, harder to pay your credit card bills, harder to pay your auto loan. And next we get a recession and all the follow-on effects from that. Subsequent to that, there's going to be overreaction number 1 and maybe 2. Overreaction being the powers that be coming over the top and saying, don't worry, everyone, you're in a recession, the economy's doing bad, now we admit that, and what we'll do is we'll print so much new money. But that's the mistake. That's what got us in the situation in the first place. So they're going to come over the top. And if that doesn't do it, they'll go, okay, the problem is we didn't do enough. They'll do even more. And this will be astronomically greater than all the quantitative easings leading up to this point. But when they do that, either the first time or possibly the second time, that is when we could get into some serious hyperinflation. And what is hyperinflation? It's products increasing by 50% per month. Every recession, the delinquencies ramp up and then they come down. So are we going to have a recession? Yes. Is that going to cause the delinquency rate to rise? Yes. From this very low, very strong base. And you're hearing inflation is going higher. Inflation is going higher. Prices are going up. Yeah, eventually I believe they will. But I also am one of the people saying that inflation is actually going to come down before it goes higher, especially if we go into a really serious recession. You know that the debt levels of corporations, municipalities, government, everybody's too great. And you know that interest rates are going to rise even more. So what happens then? And I want every single one of you, hang on, to buy a copy of Penny Stocks for Dummies Edition 3. I do not make a penny if you buy Edition 3, okay? So I'm not selling you anything here. And what I want you to do is go to the section 4, part 4, the new part, about 40 pages I added. It's all about getting your mind right in investing. You got to change the mix of stocks you're going to invest in right now. You want to get away from the speculative stuff, the technology stuff. You want to be in defensive names like utilities or stocks that do better during recession, companies that help other people and other companies save money. Also lower end things like McDonald's, dollar stores, the liquidation stores. They're going to do very well. They're going to have lots of products to liquidate as we go forward because of the inventory gluts. You also want to make a strike list of assets, things that you want to buy. That includes stocks. It includes certain cryptocurrencies. When there's capitulation, you should act immediately. You should be ready to act before capitulation happens, which means start getting ready now. And then when you have a capitulation point, you take whatever you can bring to bear to invest in that thing, especially if it's unloved, and it definitely will be if it's a capitulation point. Nobody wants it to throw the baby out with the bathwater. That's when you swoop in. There's no excuse for you. You have the entire culmination of all human knowledge at your fingertips as long as you have Wi-Fi. So make sure you follow several people who know what they're talking about, and I really hope that includes me. I really want to do a good job for you guys, and I'm not doing this to try and sell you books and not trying to sell you things. If you buy something, that's on you. So please subscribe to the channel. I'm going to tell you guys the information you need at the time you need it. When there's a capitulation point, I'll let you know. That way you can load up on whatever asset or investment is completely unloved, and undervalued. And make sure to join the Peter Leeds Army. Even if you have an iOS device and you have to take an extra step, lots of people are joining and I'm loving it. So thank you guys so much. I really appreciate it, and we're going to work really hard for you guys. We're going to make more videos, better videos, and we're going to knock your socks off. On behalf of myself and the entire... On behalf of myself and the entire Peter Leeds team, we love you guys. We do this for you and because of you. Remember that nothing we say here is intended as personalized trading advice for you.